All right. We back with another video. Good morning, good afternoon, good evening, depending on where you are in the world. Right. Today we're focusing on managing our risk in the forex trading, a comprehensive guide. Right. I feel like this is the most important class to pay attention to. So make sure you guys rewatch this video a couple of times. Make sure you get your risk management under control. Right. Because in this video, we will discuss the importance of utilizing proper risk management techniques. I will demonstrate how to effectively use a spreadsheet I've created for this purpose. Additionally, I will provide some tips on maximizing the potential of the Kashik's signals, right? We're also going to cover strategies for preparing any account balance size for successful trading in the Forex market, right? I will guide you on how to properly journal all your trades because that's also super crucial, right? People wait too long to journal their trades. So, guys, let's get to it, right? And let's get this knocked out. What is Forex trading? As we already know, Forex trading is the buying and selling of currencies and involves a high amount of risk due to volatility in the market, right? Proper risk management strategies are crucial to success in Forex trading. Types of risk in Forex trading, right? We have market risk. This is the one that affects us retail traders. It's the risk of losing money due to changes in currency exchange rates, right? Then we have the credit risk. This is the risk of the counterparty defaulting on their contractual obligations. And then we have operational risk, the risk of losses due to inadequate or failed internal processes, people, and systems. So again, our focus is more about the market risk, right? Risk management strategies. For risk management is crucial to success in trading, right? Strategies include setting a stop loss, limiting leverage, and truly diversifying your investments, right? You guys understand that that's exactly what we're doing here at Akashex, right? Or rather at My Daily Choice. We have our e-commerce store. We can utilize binary options. We can invest in stocks and cryptos. We can trade indices, commodities, forex pairs, right? So that's us keeping up with understanding that, hey, we want to diversify investments, right? Setting stop loss and take profit orders, right? The best way to truly maximize your profits is to make sure you have a sound take profit. A lot of times people will hold and hold and it doesn't reach their take profit, and they could have been set a more sound take profit and actually compounded their account, right? Stop loss being even more important than a take profit. Why? Because you are allowed to trade without a stop loss, and if you do so, you risk the chance of losing your entire capital. And that's something that takes you from being a sound investor to basically a gambler. And with this amount of leverage, we don't need to gamble, right? Trading psychology and risk control to manage risk. What did I say? Most important part, set a stop loss order, right? Use the leverage that you're going to get from your broker wisely, right? Limit your trade size, right? Have a set boundary of what you're willing to risk every single trade. So that way you can be able to take your lessons, as we call the losses, and continue trading for another day, right? Staying disciplined to your plan, your risk management plan is super key, right? It's going to really help you keep your emotions in check, right? We all are emotional beings. We all have different relationships with money, and having a risk management plan will really take away a lot of that anxiety, right? So, for the beginning of this call, the key takeaways is Forex risk management is crucial to protect your investments, right? We must diversify, which we're doing here, right? Your positions, the actually lot sizes you placed are super important. And number one, last but not least, is using your stop loss. That's super key. All right, guys. So now we're going to move on to the second part of the call where we're going to go over our spreadsheet. How are we going to get prepared to make sure that we actually have a sound risk plan, right? So what I'm going to write here is keep your losses the same, right? Profits and be the variable. All right. What do I mean by that? Right. When you're looking at your journals, because you're going to journal every single trade you take, right? So when you're journaling, you'll get to see that there are going to be some days where you have really large profits, and then there's going to be some days you have some small profits. One thing you don't want to do is have your losses be a variable, meaning maybe one day you lost 1%, the next day you lost 10%, 50%, right? I've heard people tell me, hey, I took a loss on a trade and I lost my whole account. And I'm like, well, you can't possibly be using the spreadsheet or any risk management because no one trade should blow your account, right? So, with that being said, we're going to go over how to use it. Now, if you're studying the signals, right, how many stop losses is typically used on the apps, right? There can be 20 pip stop loss, 30 pip stop loss, right? But on average, we stay anywhere between 10 pips and maybe 60 pips in Forex. So this is going to focus on Forex pairs because I feel like when you're super new, Forex is a lot less volatile and the risk is significantly decreased, unlike with indices where with Forex pairs you may risk 40 pips, indices you're looking at a 400 pip risk. So the very first thing we need to notate is our account balance, right? Your account balance is super key. It's going to set off your entire risk plan. So what I like to do, I like to set my students up by using prop firms where they can make a small investment and actually have a pretty decent account size to work with. So the one we use, right, it only costs you $100 and it gives you 2,000 live to trade with. So in essence, the plan allows you to scale up your account every time you reach 10%. So as we can see here, the account balance is 2,000 and 10% of 2,000 is 200. So I always set my risk per day at 1%, right? A lot of people will risk 2, 3, 4%, right? I think that should be left for veterans. And to be honest, some of the most profitable traders will tell you they wish they would have stuck to 1% in the beginning, right? Because it allows you to take a significant amount of L's, but still remain profitable at the end. So what we do is, as it says, right, total risk allowed per session is $20. Why is it 20? Because that's 1% of 2,000. Now, I always say for a trader, you might want to take 2 trades per day or 2 trades per session, right? If you take 2 losses, you are to stop trading and wait to the next day, right? That's super critical because you do not want to go back in the market after losing your risk for the day and then you end up losing more than you bargained for. So what I did was when it comes to like our Kashix platform, right? We have the typical similar risks. So what I did was I just preset it for you, right? So let's just say there's a signal that may be 40 pip stop loss, 25 pip stop loss, a 20 pip stop loss, or a 10 pip stop loss, right? That is going to be the most important part because we have to figure out, all right, well, if it is a 40 pip risk, what lot size should I use? So the blessing about this spreadsheet is it kind of gives you your risk control from the beginning so you're not having to rush or you use the wrong lot size, right? It already has it preset. So in this case, right, if we're going to take 2 trades per day, right, which is what I love about this risk management plan, if we're going to do that, then that means when we actually take a trade, we're only risking 0.5% because I cut it into 2, right? So in this blue blocks, it shows that total loss per trade can only be $10. You want to be $10 or less. If it's over $10, you want to lower your lot size. And that's how you really get the correct risk management. That's how you get the correct lot size because, originally the way we were all taught, especially if you read the textbooks and maybe go on YouTube, it says you're allowed to trade a point oh 0.01 $100 account, right? It says you can trade a point oh 0.02 if you have a $200 account, right? So what tends to happen is you may get excited and you want to trade US 30 or you want to trade NAS 100 and you don't realize that NAS 100 is 400 pip risk, right? So let's just say I use what the book says where it says, hey, if I have 100, I can use a point oh 0.01. All right. So if I have 2,000, what does that mean I can use then? Right? That means I can use a point 20. They're saying, hey, no matter what the risk is, since you got 2,000, you should use a point 40. So if I put a point 20, excuse me, I'm actually risking $80, right? Right. So in this case, even though according to how they teach us in the textbooks and how the brokers taught us back in the days, and they're still teaching this. This is why 90% of traders are not successful, because their risk plan is already taught improperly, right? So in that case, with us having a risk of 400 pips, right, on indices, right, you didn't know and used a point 20. Now you're risking $800. So this is kind of why a lot of people come into marketing like, oh, but I thought they told me I could use 0.01 for 100, right? So a point 10, right, would be for 1,000, and then a point 20 is for 2. As we can see, we cannot base our lot size on just our capital. We have to include their stop loss. We have to include how much the risk is. So once you do that from the beginning, that's really going to set you up for success. So we can put this back to 40. All right. And we're going to change our lot size back to 2. Now, let's just say you don't know how to count lot sizes. I put a formula in here. So all you have to do is check the column, right? If the risk is called down, let's just say the trade says, hey, we're going to take a buy and the risk is 25 pips. Well, then you know, hey, automatically you put a 0.04 because you're only risking 10. Remember, this is preset, so you don't have to figure it out. But let's just say for some reason we get a lot size. We get a stop loss that is not on the preset, right? I put an extra space. So let's just say the actual risk this time was 18 pips. You would type in 18 because that's the stop loss number. And then you would check your risk and say, hey, am I as close as I can be to $10? Am I over $10 or am I below? So right now we're at 180 if we kept this 0.01. So what you want to do is, right, you may not know how to count lots yet, but thankfully you have the cheat code with the spreadsheet, and we can just go up 1 penny at a time so we can get as close as we can to our risk plan, which is $10. Right? Imagine how you're going to feel if you know every time you take a trade and press the button, right, you're never going to lose more than $10. Right? A lot of people didn't even know that they can actually do just that, right? They can always risk the same amount no matter what the pip is, right? So if your stop loss happens to be too high and you're at the lowest lot allowed, which is $1, then that means that's a trade you actually cannot take because why? Your risk plan stated so. So let's just see if we go to a 0.06, and that puts us at $10.80. So it's a tad over 10. So that means I would have to go back to 0.05. All right. And now have everything set. So let's do that one more time. All right. Let's just say the trade came out and they said, you know what? It's a 31 pip risk. I just called a trade not too long ago and it was 31 pip risk. Right. So since we had the 0.05 in there last, it says, hey, if you take this trade with a 0.05, you're going to be risking $15.50. So in this case, we will have to bring our lot size lower until we get into those parameters of $10 and less. Right, so we do a 0.04, it's 12.40. If we do a 0.03, right, it's 9.30. So that's what we can take. We can use a 0.03, and if we happen to take the loss, we won't lose more than $9.30. Right, if it hits TP1, let's just say TP1 was 20 pips, then we know we're going to make $6. What if TP2 was 31 pips? Right, then you'll make 9.30. Right, so this is your target. I always say if you're a new student, you want to take your first couple of weeks and just set your take profit to TP1. Whatever they say the TP1 number is, plug that in and go for the first go. And then you can learn how to take TP2 and TP3, take partials, move your stop loss and things like that. Right. So another thing I wanted to go over is when you're dealing with indices, right, we calculate that into points, right? But points equals pips. So for some reason, the educator says, hey, it's a 10-point risk trade. Understand that you're actually risking 100 pips, right? So if you get to that level where you're at a $4,000 account level, you can start taking indices. This would be a way to just easily convert it. If there's a risk on there you don't have, you can type that number in and it will give you 200 points equals 2,000 pips. All right. Then we have this other section. right? In this pink section, what this is, right, this is going to coincide with your journal. So let's go to our journal section. Right, so let's look at this, right? So when you're journaling every trade you take, right, you want to make sure that as soon as you finish taking a trade, you're entering your notes, because that's going to be super important, right? I want you to also notate on this side where we have 40% is the minimum accuracy goal, right? Thankfully, in Forex, you can be 40% accurate and be profitable. If you can get 70% and above, you're really at a sweet spot to really compound your account. All right, so I'm going to show you how to fill this in. So you put the date and time. That's super important, right? Because maybe you're taking losses because of the time frame that you're taking your trade, right? You put the pair in. You let me know if it was a buy or a sell. You know what lot size you're going to take. Why? Because you got it from the beginning, right? Because remember, the signal will come out and will say, hey, here's your stop loss, take profit, and your entry. So let's just say we took a trade that was a 25 pip risk and we entered a 0.04. It automatically tells us, all right, you're going to get paid 40 cents per pip, right? So when we come here, that's what we want to fill out. We want to put in our 0.04 along with our 40 cents, right? So let's just say we took this trade here, right? Let's just say it's 7, 6, 23, 8:43 p.m. And y'all know my favorite is NZD USD. And let's just say we took a sell and we decided, all right, we got to reach a 0.04, right? It told me we're going to get 40 pip risk, right? It's a 25 pip stop loss, and TP1 was 20 pips. So it's showing us, hey, if you go to TP1 and make it, you make about $8. If you take the loss, you lose about 10, right? So here is where you're going to put how many pips did you actually want to lose, right? And this is where it can get tricky. Because let's just say the app goes off and it's like, hey, TP1 hit. And you're like, okay, so boom, I won 25 pips. And you put your 25 pips in, but it gives you $10. But when you look at your account, it says you only won $7.50, right? So to get the actual number of pips count, you will go back to the process, right? And you're going to come here and you're going to type in what you actually want. So if it says $7.50 with your profit, you put that in. And now you have to enter how much you're supposed to get paid per pip. And remember, that's 40 cents. And now we know, okay, we won 18.75 pips. So now you can actually plug that in to get the right number. So it's going 18.75. Right? And now it shows 750. So here we can put TP1 hit. And it was a win. So when it comes to your win and loss section, right? This is where you're going to put a W if you want to trade. So this would be a win. This example is a loss. This example is a win. And right now, right, we're at 67% accuracy. All right, we want to trade, lost one, won one. And our total profit right now is $10.50. All right, so we grew our account at least 0.5% with those 3 trades. All right. So when it comes to your confirmation section, if it's a signal you took, just put the educator's name, right? If you took your own trade, you want to write your confirmations. Why did you take a trade? Was it a break in the retest? Was it supply and demand, right? What was going on there? Now, if you manually close a trade, what you want to do is give an update, right? I want you to come to the right. It's over here to the side, right? We have a column for update. Can't really see it, but I want you to type in this section and tell me what happened with the trade. Right? Did it end up hitting stop loss and end up hitting take profit? Because we want to figure out if you are closing your trade in fear of it going against you, or if you're taking trades that are actually keep hitting stop loss. We want to make some adjustments there. So having that notated why you closed it and what the end result ended up being is going to be super helpful, right? Because if you journal your trades, you're going to be able to realize things you can fine tune, like, hey, I shouldn't trade on this day. I should stop trading this pair I should stop taking this particular signal. I should maybe not use my own trades, right? All the information comes from filling out your journal. So that being said, guys, I hope that was super helpful, right? Hopefully this is making sense. And again, no matter what account balance size you have, right? This is the funded challenge requirements to scale up, but you could have a goal of I just want to make 5% a week, depending on what it is, right? So in this case, let's just say you had a 10K account. All you have to do is plug in that 10,000. It will automatically update what your risk control is. So now this is where a little bit of work comes in, because now we have to update our preset numbers so that way we can be prepared as soon as the trade comes out. Write this on a couple of index cards, all right, and that'll super help you. So again, if we have a 10K account and we want to stick to that same 1% rule, it's saying, hey, your total risk allowed per session is $100. You can take 2 trades per day, and that means each trade you take will not risk more than $50, right? So it doesn't matter what the stop loss is. I want to make sure my lot size is correct, so my risk can always stay as close to $50 as possible. So as you can see, we will have to adjust. So in this case, we're all below 50. So that means we have to individually upgrade our lot size. So in this case, we're going to go to 3, right? Still not enough. We put a 0.10, right? $40, we were close, right? 0.12. It's going to keep going up until I can get as close as I can. And I think 0.13 would probably be too much, right? It's 52. So that means we have to keep it to 0.12 for that one. All right, so now we got a 25 pip risk. Maybe this is 0.15. Let's see. Nope, not quite. Let's see what 0.20. Exactly. 0.50. So let's see if this is 0.25. Right. And then this would be 0.50. Right, so now our parameters is all set. So no matter what signal comes out, if it's 40 pips, I know I'm going to put up 0.12. If it's 25, 0.20. Either way, no matter what comes out, I will not risk more than 50. And if there's a number that comes out that is not in your preset numbers, again, here's your extra slot. So let's just say, it was a 60 pip trade, a little more risk, right? We can keep going up until we get to $50. Right, 0.06, getting close, maybe a 0.08, 48. So there you go. So if that trade was 60 pips, you have to put a 0.08. You come here, you type in the date, the time, the pair, buy or sell, right? You put your risk, your lot size, your pay per pip, how much is the risk for trade, how much is the take profit that you're setting your trade to, right? Then you come back and enter how did the trade turn out? Did I win? Well, then I put the minus pips. Then I put plus pips. If I lose, then I put minus in front of the number, right? Always add in my confirmations on why I'm in that trade. Let me know if it hits stop loss or take profit. If you win, you put a W, right? If you lose, you put an L. Now, there's 2 columns, the 3 columns you don't want to touch, right? You don't want to touch these 2 columns here because that's where the formula is, and you also don't want to touch the gray. So if something does not add up accurate, it is something going on in these other boxes that is giving you the wrong answer. Maybe you don't got the exact pip amount, and you have to go back to the process and type in exactly how much did I want to lose here, right? So if the number is different, you have to update it. Put in how much you're supposed to get paid per pip because that's already chosen ahead of time, and it will give you your pip amount. All right, guys, make sure you tapped in. Make sure you take notes. Make sure you prep your proper risk management for your trading account. It's super critical, and I will see you guys in the next class.